All right, welcome back to Technical Tuesday. Had technical problems at the start, but here we are. Um, Alberto, are you still able to see my screen, the full
Yep, and
screen?
I can see it perfectly now.
All right, and here comes Darren. And all right, Darren, are you able to see the full screen?
Hold up, I'm just joining the meeting now,
All
so
right,
I can't
great,
see anything. I'll let you know. I'm sure if Alberto can see it, I'm sure I can as well.
perfect. All right, so let's jump back into the topic of the day. We were talking about uh, price, we were talking about volume, and the purpose of today's Technical Tuesday is to talk about the nuances of price and volume. I think that these two have to come as a pair because when we try to separate them, it leads to a variety of confusion. And the way that I've learned to interpret volume and price is as a pair because the where we see it, how we see it, and when we see it all matters. And Daniel had brought up this question about price and volume, and it asked me, well, why, when I take a look at this chart, I thought that the price and volume action, I thought the volume was actually good on this because one of the things that he rightfully pointed out was that, well, it seems like you have a cup with handle here, right? A cup with a high handle, to be exact. And you have the volume and the handle creeping up. What's the deal? So, uh, well, when I see this, I think that price and volume, I think that they tell us a story. And they tell us if something is under accumulation or not. So when I see this pattern, and I see this cup with handle, uh, the first thing that I like to do in really any pattern that I'm going to look at, I want to walk through the entire chart and study it day by day by day. And so we'll do that before we get over here because if we do that first, it'll influence our opinions of what's really going on this right side. And we'll have a different interpretation of it. So if we zoom out a bit, you could already see that prices run a good long way here, right? And this latest run really starts right here, uh, like early February, and you can see how when price is moving up, volume is increasing. So what does that tell us? That tells us that buyers are interested. There's more buyers and sellers at that point. And how can we know that? We know that because not only is price moving up, but it's doing so on increased volume. At that point, I believe it's moving into new highs, at least new 52-week highs. I'm not sure if it was all-time highs. I think it's all-time highs. Yeah, it was all-time highs. Then when price starts to come in back here, you start to see volume tapers off a little bit. And sometimes just like how price will ebb and flow, volume will ebb and flow. So it's not where we're always going to have heavy volume on the upside, and it's not where so like if price is moving up and we're like, oh yeah, there's loads and loads of volume. It's not where we're going to see heavy duty volume every single day, and then we should start to get freaked out if the prices starting to level off and the volume's not there. Maybe price is going to dump. It's taking all the different elements that you're observing into account. So over here, price is climbing. Then all of a sudden, there's this big volume day right here, right? And so the question that was brought up earlier, and we'll talk about this a little bit later on separately, is quote unquote dirty volume. Right? Like things that muddy how you might interpret volume. Let's flag this day right here as if you really needed to flag that day. I think it kind of sticks out like a sore thumb, but we'll just flag that day so we can come back to it later on. And then price continues to run up. Volume is heavy. Volume pulls back over here. There's a big increase in volume. Is this getting ready to sell off? On that day, the answer, my answer to this would be, I don't know, right? And it's okay not to know. Part of trading is being able to accept the I don't knows and being able to plan for the what ifs. I think that's a big part of what's meant to. Yeah, go ahead.
Yeah, I have a question. You have to accept the I don't knows, but are you saying not to try to find out why something happened, or just to accept it? Because I can see accepting it, no doubt, but not knowing why after the fact. I don't know about that.
Excellent question. I think of trading kind of like a chess match, where we have the board. Say it's my turn and you and I are playing each other. I could think through, okay, if I move this piece here, then that could influence your decision, and it also opens up certain other parts of the board. And so I'm starting to think through other moves, my next steps of the trade, right, or of that position, how I'm going to move. But then once I move that piece, that's done, and then it's your turn to move. And you could do anything at that point. You might do the move that I anticipate that you did. You might do any one of the number of moves that I anticipated that you would make, or you might do something completely out of the blue that I didn't anticipate. And maybe I thought through many different things. I'm a halfway decent chess player, but maybe you're several levels better than I am, and you move something that I didn't see. When it comes to trading, we can prepare as much as we're able to prepare, but we can't prepare for everything. One of the great beauties of trading is that we design the rules of our own game and how we're going to operate within that game. If we try to make the rules way too complex, then at some point even the best player will have difficulty following their own rules. Some people love lots of rules. Some people want to keep it very simple. Part of this whole game is to know thyself. Part of what I think, from what I've observed from studying, and most of the traders that I've studied, admittedly, are fairly similar in nature, right? Because I started out I didn't start out with O'Neill, but O'Neill was the one that made the most sense to me once I found him. His process and rules made sense, and then I found other people that jived with his rules and processes, so I started to get other nuances of how to play that part of it. But if I started to deviate from this rule set of, okay, there's certain stocks that have these core elements, and here's how I want to trade these core elements, and here's how I'm going to interpret what's happening in front of me on the chart. And if I started to add other things that were completely unrelated, then it starts to break the game. Does that make sense?
Well, it doesn't answer the question, though, because the question was, are you saying it's not good to understand what happened? Not to add rules, but just to understand, because volume went up 1,000% that day and price hardly moved. To me, I'm like, why did that happen? That's
part of the game. One of the rules of the game is, what are we going to include in the game? If you're playing basketball, should you introduce a hockey stick because it was laying there on the ground?
No, but what I'm saying is, well, to use the chess example, all great grandmasters study the past. That's why games are annotated. They always study them. So in my mind, yeah, I'm not like, I would want to know what happened, because if I ever see 1,000% volume and no price increase, I want to know, okay, if I ever see that again, is this going to signal that, because look what happened from that. From that, it went up, what, 40, 50%? So it seems like that was an important thing that happened, that, I'm just, I'd be like, I wonder why that happened. Like, it just seems like
Interesting.
such a big thing.
So perhaps the reason why I'm not interested in it is because I've seen this this kind of volume happen so many times where sometimes it will stick out like that and it'll just be an anomaly. It'll just be something like a quadruple witching day or something along those lines where there just happens to be increased volume on one day and it's not really that big of a deal. It's almost like, well, this gets back to the quote unquote dirty volume
Yeah.
concept. So that's why I look at it and it's like, that doesn't bother me. Whereas I wouldn't make that part of it not bothering me a rule for somebody else.
Yeah.
Right now, and I wouldn't discourage you from looking into, well, why did that happen?
Yeah. I'm just always curious why things happen. It just seems like such a big thing that happened.
But as far as this volume bar goes, right? So price is selling off over here. Price closed at its low of the day. Volume was elevated, and it was elevated higher than it's been really since the last earnings period, barring this anomaly day. And if you take that, let's say that you said, you know what, this isn't an anomaly, that this here, something's happening, right? And to your point, well, that's a whole lot of volume. Price didn't really move a whole lot on that day, right? And then that could be something that's starting to mess with your head. Well, was that somebody that's selling into strength ahead of earnings, and now earnings is a couple of days away, and price dropped 5%, and I'm back to where I was a week ago when this happened. What should I do?
It's an interesting candle in relation to volume. I mean, to me, it's sort of like someone is either buying or selling in a tight range. It's not going above or below that range. So someone's either buying or selling a ton right in that range.
So with volume, well, we know how much activity is happening, and with price, we know what kind of activity is happening. So if price doesn't move, and there's a whole lot of activity, that's telling me that there's a big tug of war happening.
I mean, that could be a put through.
Explain.
A put through is when, say, for example, Vanguard, Templeton, Fidelity, one of the big fund managers has Williams Sonoma in a certain fund or funds. And they want to switch out of that fund into another fund or other funds. So that gets put through the market. It has to go through the market. It shows up as a huge spike in volume, but at the end of the day, it hasn't moved the price, which is what they want to do. They don't want to move the price. So that could be a put through.
Right.
I've seen tons of those in the past. So
another example of dirty volume.
Exactly.
Well, there's another thing that happens also, right? Where, and this might be related to what you said, Alberto, where they can buy it outside of the exchange and then the volume doesn't get added until the next day or the day after. That's another thing that can happen.
That's true as well.
Out of regular trading hours, yeah.
That's a terrible thing, I think. It's crazy that exists.
Yeah, so we're already getting into the thick of all this dirty volume. And it's one of the things that Mike Webster, I forget who brought up Mike Webster, but it's one of the things that he was talking about. Well, he doesn't look at volume anymore. Like or at least doesn't look at volume the same way. He'll still teach the traditional way of interpreting volume, but it's not, his own belief structure has shifted.
Now, well, I've been a person that's followed volume and price for a while now, and I can tell you that my perspective on it is shifting as well because of that one major thing that like people can buy stuff outside of the exchange, so the volume's not even telling you a real story sometimes. That's crazy to me.
Well, is it telling you a story in real time or after the fact?
Well, if it's after the fact, then that's helpful in some ways, but not helpful in other ways.
Yeah, and dark pools also don't help transparency in that sense either.
So perhaps this partially explains the reason why I'm unaffected by a bar like this, or with the dirty volume concept in general. Most of the time, I'm using after the fact data. Most of my interpretations come after the market is closed. So if I'm able to look at the data after the market's closed, very similar to how Nicholas Darvis did, another huge inspiration to me, then I'm seeing, well, here's what happened. Now, what's my next move going to be? Right, and that kind of brings us back to the chess match. You make your move, and now I've been presented with this data. Well, what's my next move going to be?
Which is why I asked you the other day, Mike, how can we gauge intraday volume? Because I know the market search has this indicator which says, percentage traded volume compared to the last 30 trading days at this same moment in time compared to those 30 days.
Oh,
So it's
really? I'm not sure I saw that one in Market Surge. I saw the question, but when I look at volume in Market Surge, I go to, and were you looking at it on a daily chart?
I can't recall because it's been ages since I last used Market Smith Surge, whatever you want to call it. But there was the top right, there used to be a volume indicator which told you how much above or below the average it was for the day. But also, if you
Right.
looked at it on an intraday basis, it told you, right, it's running at 300% over and above what it would be over the last 30 days at this time of day.
That part, I'm not sure about. If I click on the day, you notice that it gives a volume percentage. Right? You see that table there in the lower portion of it, just above the moving averages. It says volume 125%. That means that as of right now, volume is already 125% above average on the day.
Yeah, the last 50 trading days.
Or that might be the rate that it is, because if you click on this in the morning, volume would have been up. I've seen volume be up, say, 1,000% near the open, and then by the close, it's it was about an average day, right?
Yeah.
So I haven't used that for volume interpretation in Market Surge. What I'll do is I will use Stu's thing. Right, so Stu's
That's another
indicator
question
is the
I have.
dollar volume.
Tell me how to use Stu's indicator, because that's what I'm interested in as well.
So this one down here, with the blue and the red and all that stuff, that's Stu's indicator. That's dollar volume. The way that it works is that it will get shaded blue if price is above average for that particular time period. So when you see it, when it's green, it'll get shaded green if the bar is up. It'll get shaded red if the bar is down. It'll get shaded blue if volume is above average for that particular point in time.
Right.
So on Friday, May 10th at 3:30 Eastern, that this was above average.
Interesting.
On a 30-minute, okay.
Yeah. So this is something that I find particularly useful, and I'll use this when I set alerts on trades. When I set an alert on a trade, rather than just setting up a working order, I'll go down to the 30-minute time frame and I'll see how is price breaking out and what's the volume. I'll look at this volume because I want to see, is volume heavy relative to this particular point in time? Because let's say it's breaking out first thing in the morning. Now, oftentimes volume will be heavy early in the morning and late in the afternoon. But is it heavy relative to other 9:30 a.m.s? Sometimes it's not. And if it's not, and price is breaking out, then and I just had an alert, I'll let it go. So that's how I use this. Any questions about this dollar volume indicator?
Yeah, I wonder how I would use it. Like, I don't know if I'd use it in such a short time interval, but I can definitely see the value of that. I just wonder how I'd use it. Maybe back testing or something.
Yeah, absolutely. And that's you just hit the nail on the head there, Darren. And that's what I do with all this stuff. There's been several indicators that Stu has given us, and it's fantastic. And I thank Stu every time that I see him. And all these indicators, they're all in the resources channel. There's links to all of them. They're all in TradingView. So what I'll do when he mentions an indicator, what I'll do is I'll put it on my chart and I'll just leave it there and I'll see what I see over time. And if it turns out that I start to catch different things, then I'll add it to my toolbox. If I find that, you know what, this isn't doing anything for me, then I delete it.
Yeah, it's like a workout, like an exercise. In a workout, it's like whether that fits your style or not, the exercise.
Yeah. Yeah, I like that. All right. So we spoke a bit about, is volume dirty? And I think that the question of, is volume dirty? I think that an interesting question to tack onto that is, how do you deal with it if volume is dirty? I assume that volume is dirty. I assume that price is being manipulated. I assume that it's all out to get me. Right? So if it's all out to get me and volume is dirty and price is being manipulated, well, what can I do about it? Well, I can control the things that I can control. I can ignore the rest. Well, what do I control? Well, what do you guys control?
Well,
Size and risk management.
Yeah.
Size and risk management. Okay, well, what else do you control? What's within your control?
Understanding what else is happening in the greater market.
Is that in your control? Because there's plenty that's happening.
No, but that's in my control to understand it. Not to control it, but to say, okay, what's coming up? Is there a reason why this particular price and volume is doing this? And then I can look at the macro market and look at what's coming up, the catalyst in the macro market, and say, okay, that relates to why this is happening right now.
Okay. So what if we, instead of saying, well, what if we added a little bit more specificity to that?
How so?
So large macro events, right? Because there's plenty that's happening behind the scenes that we have absolutely no idea about.
No, I'm talking about large macro events. I'm not talking about stuff behind the scenes. I'm talking about like a couple of weeks ago when there was the FOMC meeting and like 4 important meetings right on top of another, and the market dropped heavily from that point. Like that was something that I could have been aware of that I wasn't even aware of. So that was in my control to at least be aware of it, or to set up a process to be aware of it.
Okay.
And I did. I changed some things in my chart so that when I look at stuff, I can be aware of what's coming up now.
What else is in our control?
Whether we're in the market or not. Cash is a position which the vast majority of players out there just cannot do. They haven't got that luxury.
Right, exactly. And I think that for the most part, that's maybe there's 1 or 2 things that we could find to add to this list, but that's basically what we can control. We could control whether we're in, we're out. We could control when we get in and out. We could control what information we'll have an awareness of, so what's important to us, and we could control our size, right? The how much. So if we're able to control those things, then I think that the onus is still on us of, well, what do we do? Do we go in? Do we go out? Right? I don't. Well, when people say that the market is being manipulated, of course it is. we're trying to manipulate it, right? Well, we're trying to, if we're buying, right? We want it to go up. So, and it's that's kind of what an auction market is. So, um, uh, when I think of how do you deal with volume being dirty and is it a problem? Uh, well, I think we'll all come to our own answers for it, but to me, the answer is that I'm unaffected by volume being dirty, and a large part of the reason is because I'm using aftermarket data. I'm not trying to, I'm not day trading, really. Right? Like every once in a while, a trade will end up being a day trade, but it's largely unintentional, right? Like get stopped out on a day, or if price takes off, and you just have to sell that strength. But those are anomalies. For the most
It's
part, I'm
interesting.
using aftermarket data.
It's interesting. I definitely changed my perspective on volume because I just started seeing weird things happen with volume, and I just saw it wasn't reliable. And then I learned, I was researching it, and I learned that thing about how they can make trades and then add the volume later. And I was like, well, holy shit, why even consider volume at that point? Because, or like make it such an important act, like in the moment indicator when it can be so manipulated so easily.
So the problem isn't looking at. Let's take the replay off. Right. So the problem, and you know what? Let's go to Powell, because this is a trade that I feel like I should have been in.
Powell's interesting.
Yeah, I feel like I should have been in this one, and I kind of botched this one up.
Yeah, but
And
Powell really started its run before the summer. Actually, it's summer of last year. It's really come a long, long, long way.
well, yeah. If we could look back here, and yeah, it's had this whole run, but this is a halfway decent cup of handle.
Yeah, yeah. But
So I'm
Mike,
not saying that you guys should be in it per se,
no, but Mike,
but I should be
wouldn't
in
you?
it because this is one that's, and we'll talk a lot more about this in the days ahead. I'm working on a new book, a new ebook for business plans. But this is this is a pattern that's in my plan. Cup with handles. I should have been in this. I didn't want to give it 6.5%, even though I probably should. And so this part might be a little bit outside the scope of this conversation, but there's still a part of me that has a fear of losing money, or a fear of losing more than a certain amount.
Yeah,
And I
because
think that that's part of what kept me out of this.
because so I've looked at this stock now for the past year or so, and I missed the first initial rally, which was in the summer on earnings, and it just bounced and went straight up to it almost doubled, and hung around the $80-90 mark for a long, long time, and then it bounced again on the next earnings, which we can see here, and then it just took off into the stratosphere. The thing though is that since the last earnings, or I think that was February, the character of this stock has changed completely. If you look at what it was doing before, it's like building steps, big steps, long, wide step, but then suddenly it just like the average true range has changed completely. The volume profile, I think, has changed completely. It's just like a completely different stock.
Yeah. And when the character of a stock changes, that's something that we need to take notice of.
Exactly. Which makes it even more dangerous, I think, in my opinion, anyway.
Well,
Well,
it
I'll say
depends on which way the character is changing. But Darren, you go first.
Well, I was going to say that stock has, I mean, this is something I don't think a lot of people look at, but I consider because I've been caught in this a bunch. But the stock has 10 million shares float. And when it has so few shares, it can be easily manipulated. But it is, let me see, no, but it's high price. Okay, so maybe that makes a difference. Yeah, maybe, yeah. I don't think my thought really works when it's high price like that.
Yeah, let's.
Meaning a low price stock with low
Yeah.
float shares is dangerous, but high price with low float, I don't think it's as dangerous. So I take back what I said.
Okay. Yeah, it's on the lower side, but it's not crazy low. Like,
You mean the float?
um,
So the average
I was
daily
looking
volume.
at the shares per day, but yeah, the float as well.
But it's $100 stock. So like for example, Lunar, which I know really well, Lunar's a $5 stock that has 100 million shares float. But at one time it had 20 million shares float, and when it had 20 million shares float, there was a lot of weird stuff that happened with its character. So that's why they had to add all the stock, all the shares,
Hmm.
so that it gets less manipulated. But that's a low price. This is a high price, so it's not going to be the same dynamic, I think.
Exactly.
Yeah, so I don't know. I don't have any opinion on this. Alberto probably has a lot more since he's been following it for a year.
Well, less about so the discussion is still price and volume. So let's keep the discussion there. As far as that, like I'm less interested, at least for this call, about digging into here's what the company does and that sort of thing. But
Well, if you look
just
at price and volume from January 2024, it doubled. The volume doubled like in February, and it stayed
yeah,
at a range double. So that's a good sign, I think, if looking at a stock like
it,
this.
absolutely. Well, it's uh, I would say
And to me, that's not dirty
yes,
volume.
it's something that I would look for. It's something that I
Yeah.
would look for to see that, okay, there's this volume surge, and to not just look at it on a daily chart. We've been looking at a lot of daily charts to see, well, what's happening here on the weeklies, right? So you start to see the big weekly volume come in here too, and that's why I have my chart set up like this. Well, I have four time frames on this chart. I have monthly, weekly, daily, and 30-minute. And very recently, I'm not as tech savvy as I probably should be. I just started to find out that, hey, you could manipulate the size of each of the windows.
Yeah, that's cool.
Yeah, it is. So the reason why weekly and daily are larger is because those are the ones that I care more about. And then I'll dive in a little bit more on to the 30-minute if it's something that I'm really interested in. And the monthly I use more for a perspective of, well, how far has this thing already moved? Uh, but it's right here that the character started to change dramatically, right? Because you have, what is that, from July 23 to January 24, and then price finally starts to take off, right? So you have all the sideways action, and then price starts to run up again. And to the point that you made earlier, you had this much larger volume surge. Then
I,
the
I
cup
have
was
two
handled.
questions.
Yeah.
Two questions. One, do either of you have an indicator that you recommend in terms of seeing, like, really seeing how average volume is changing? Because I have that blue line that runs through the volume, but I'm wondering, and I see, Mike, you have some sort of like overlay. I was curious if there's like a really good indicator for that, because I like to see
No,
volume,
it,
like if it's changing, how much it's changing.
it's just the 10-week daily average volume.
Yeah, there's
The
no.
10-week vol. So yeah, this is just a moving average. On this one, it happens to be shaded, and on this one, it happens to be aligned. But it's just a moving average, the volume.
Okay.
Yeah, personally, I use the 50-day as well. So 10-week.
Oh
So
wow.
so the main thing that I'm observing on this, as volume's declining, is that the volume is declining as well. So we had this huge run up. Volume, well, was pretty heavy on the run up, and then overall on the pullback, volume has declined. Then on this right side, volume is increasing again, both on the weekly chart, and you could also see it happening on the daily, right? Especially like right here after earnings. And then what happens? Volume drops off again, right? And this was the first time that I was buying it. I was buying it right on this day. And why on this day? Do you remember why? If either of you follow me on this one. The reason why on this day was because it was a Wednesday. What does that have to do with anything? Well, upside reversal on the day. Low of the week. So when you have an upside reversal and it's potentially the low of the week, since it's a Wednesday, half the week is gone, more than half the week's gone. There's a good chance that I'm getting not just daily low, but also the weekly low. And it's also occurring right around the 21 period moving average, and it's also occurring right around a potential prior resistance area from back here.
Two things. Let me ask two real quick things. First of all, what day was that you bought it? April 17th?
That was May 8th.
So you're saying that on Wednesday, if you see a stock go to a low on a Wednesday to you, and let's say the market feels good, to you, that's a sign that, okay, this is the lowest it's going to be this week. There's a probability that this is the lowest it's going to be this week on this day. And this is a good point to buy in.
But there's other things that are baked in there, though. Right? So I wouldn't say that per se. So listen to the whole thing.
Yeah.
There's those points that you just mentioned. With it being a Wednesday, it price had dropped it to the lowest point during the week, reversed, closed at its high. So this low, and you can also see what's happening over here, right? The cursor's at the same point. So that ended up being the weekly low. So on a Wednesday, if price is at that point on a weekly bar, you stand a chance that this could be the weekly low. Now, am I going to buy because price positively reversed and closed near its high on that day carte blanche? No. The reason why that I did buy is for the other things that were also happening at the same time. There was also the 21 period moving average there. There was also prior resistance that could have turned into support from back here. And so there were other reasons why this could be a potential high probability, high reward to low risk entry point. And at that point, let's to throw this stuff back on.
Yeah, but the catalyst
was only
like I understand
only about 3% worth of risk here.
3% worth of risk, yeah. In
right?
what way?
So the distance between where I would enter and where my stop would be was approximately 3%.
Mm-hmm.
And when I take a look at my data, right? So now that take a look at my data, what does that mean? That means taking a look at my journal, taking a look at my statistics. So now we're starting to put all the different pieces together, right? All the different trading skills, because the journaling is a skill and post-analysis is a skill. So when I go back and look at my data, I know that, I tend to make about 10% on the average winner. And that's over not just historically, but over the more recent trades. So if I see that I'm going to risk 3 when most of the time I make 10, this is a potential 3R trade sitting there.
Now, in my chart, I see it on that Wednesday, it went back to the 10-day. And then the 21-day was your stop. Is that correct? What I'm seeing?
Are you using exponential or simple?
On the 10-day, it should be exponential.
Yeah, I'm using a 10 EMA, a 21 EMA. So
yeah, so am I. So for you, it went back to the 21 EMA on that Wednesday?
It was sitting right above it. Right? I said it went back to the 21, I think, but it's sitting right above it. I turned this off.
That's interesting.
Yeah, it's like right. It didn't touch it, but it's right there.
Oh no, we're looking at the same thing. We're looking at the same thing. That thin green line, that's the 10-day, right?
Yes.
Yeah. Then I said the same thing you said. Okay, good. I just wanted to confirm that. Yeah. So the 21 was your stop loss, and the 10 is what it hit. Okay.
Right. So one more thing on this chart, and then we'll take 1 or 2 more questions, and then we'll wrap things up. So I want to share with you how I screwed this one up today. And the way that I screwed it up was by not being in it. And I'm not saying that only because price is up 12% right now. And had I bought it, I'd have probably at least one scale out by now. And probably writing the rest. The reason why I screwed this up, and it wasn't just because cup with handle is a pattern in my business plan. Part of the reason why I screwed it up, if I come over here to a 30-minute chart, one of the things that I didn't like was having to place a stop below here and having this, well, let's get rid of this one, having this be over 6% stop, right? One of the parts of that is having that fear of loss, not wanting to put more on, whereas I had just put on a couple of trades and I still had open risk on the table. So I was leerish then. That's one thing that prevented me. But what I should have done was set an alert on this, or come up with another mechanism where I could still enter here, because this, to me, this is a great pivot. And if I zoom out, and I'll take the fibs off, still a cup with handle. You can still see this descending trend line area. And when I zoom in, the thing that catches me is runs up to that line, has this very tight area. And so what I'm thinking is that I could have a stop like this to at least test this idea. And if I had that, that's a 2.5% stop on a stock that I've already traded and one that can move 10% in a day. So my job is to figure out how I could better take advantage of moves like this. And last few moments that we have, take any other questions that you guys have.
Oh, I have a question.
On this or something else?
I have a weird question. What size monitor do you two use?
I haven't measured the monitor in a bit, but I've got. I think that they are, if I had to guess, maybe 22, either 22 or 24-inch monitors, and I have 6 of them.
Yeah. Oh, you have 6. Okay. I have 24 too. I don't know if Alberta used some abnormal. I've seen some really cool ones recently.
Okay. Any other questions or trading related question or?
I was just about to ask you, Mike, because I've told you before that I tend to wait for the first 30, 40 minutes to get into a trade to see how things open up and whether things are going to continue that way or not. Could we dive into, say, a 10-minute analysis of Powell for today? Just to see
10-minute analysis, yeah.
Yeah, because 30 minutes sort of masks it all.
Yeah, this blasted off.
Yeah, but then it rested.
It rested a little bit right in here.
Yeah, so you would have taken the trade like 40, 50 minutes in as it broke out of that rest in that ledge, so to speak.
No, if I missed here, I don't think that I would have taken it. I don't think that I would have taken that, because the question that I'm asking myself is, where, if I got in here, where could price go to without breaking the pattern?
Right.
So it could retest this.
You would have taken the trade in the first 5 minutes. Straight in.
If I were to have taken this, I would have had to have been Johnny on the spot.
Right.
So,
okay.
So let's drop to a 1 minute and see what happened here.
I'm definitely not Johnny on the spot.
No, neither am I.
I used to be.
You're a Mikey on the spot, right?
Yeah, exactly. Yeah, so
I would have stuck to my game plan of waited first 30 minutes, see what would have happened, and then if it broke out of this channel, this first 30, 40 minutes, then maybe, but hit the button right at 9:30 a.m. I think it's oof.
Yeah.
All right, so I actually could have gotten in on this one if I wanted to. If I set the alert and I decided within the first 3-4 minutes that yeah, I want to take this. So that's a fairly small window.
Exactly.
And that's why I tend to like trades where I have more confidence in setting a working order. And the ones where I have more confidence in setting a working order is where if I'm able to set the distance between my entry and my stop on a daily chart, it makes sense where it could be under 5. I probably should have stretched it. I probably loosely put it at around like this and just like, oh, like it's 7.5 onto the next one. Whereas the way that the pattern was set up, deeper analysis on ones like this would help.
Okay, that's interesting. It's
Yeah.
testing all-time highs now. Well, it will be in the next couple of days. Let's see what it does.
Sure.
If it's rejected or not, or consolidates again. I mean, it had one hell of a run from the previous earnings, not these earnings, the previous ones. I mean, that just took off like a rocket. So
Yeah,
let's see what it does.
it's possible, right?
Yeah.
If I'm in it, I'm probably taking something off today, right? Because a 10% gain in a day, that's nice. I want to pocket something. Then because I've pocketed something, I'm a lot more comfortable getting my stop to break even on the rest, and then let it go.
Yeah, yeah. Makes sense.
All right.
Certainly hasn't gotten much resistance to all-time highs now. It's very close.
All right.
Oh, I was going to ask you another question, Mike, but I think you're going to have to send us a loom or something. How do you go about setting your daily MAs, whether it be an EMA or an SMA, on all the time frames which you have? Which I just can't get my head around that.
I'm not sure I understand the question.
You have on your weekly, daily, monthly, and 30-minute the 50 MA for the daily. Is that right?
No, I have the daily 50 SMA on the daily chart and on the 30-minute chart.
Right. How do you do that?
Okay, so when you, so right now I'm on the 30-minute chart.
Mhm.
I'm going to go over to, let's see here. Where's the 50? 200. Okay, here's the 50. You click the little gear icon
Yeah.
where it says indicator time frame. You have a whole bunch of different options. It
Ah,
defaults to the chart,
right.
but you could pick whatever time frame you want. So I put daily, so that way I'm less interested in seeing what the 50 period moving average is for a particular time frame. I want to see, like I'm using the 30-minute kind of like a microscope to see how things are behaving, and then this is the 50-day moving average from the daily. So at this point, that's why over here I was saying that I should have taken this because I could see that this is so close to even the 10-day exponential moving average. And so
Right.
I probably could have set a stop right there.
Right.
But when I think about it, I think that the reason why I didn't was because I hadn't made enough progress on the couple of new positions that I had added already, like sweet greens, and yeah, at the time the ITL was still new and still right above the pivot, and I still had a full stop on there. So I was thinking from the point of view of, okay, I have new trades open, my portfolio heat is elevated. I don't want to turn up the heat too much.
But when you say
So
portfolio heat, how much exposure have you got right now then?
um, off the top of my head, oh, here's the log. So right now, I'm about 65% invested.
Wow.
1% of capital is still at risk. 1% of starting capital.
You really bumped it up then in the last week and a half then.
Yep.
Okay.
So,
Okay. Interesting.
all right. It's 3 o'clock my time. I'm gonna have to scoot.
Okay.
Thank you guys so much for joining me today and for being here. Great questions, great discussion as always. Apologize for the technical difficulties, but I'm glad that we were able to resolve it fairly quick.
Well, that's why it's called Tech Tuesday, right?
That's right.
Okay.
All
Well,
sorts
thanks a
of
lot,
tech
mate.
stuff. Take
Take
care,
care, you
everybody.
guys.